part where we sit here?
Yeah, we're recording now.
Oh,
So I'm getting us on Facebook Live.
hello everyone.
Hang tight.
All right, all right. I like this part of the webinar. Before I start, is just pure silence.
Mm-hmm. Yep. Okay, and we are almost there.
No problem, no problem. All right, guys, going live. Mimi, don't want to miss it. No investment easy. See, it's going down. Webinar.
Hello, everyone, and welcome to Note Investing Made Easier. I'm your host, Martin Sines, and I'm going to introduce my guest in just a moment. We have Matt Kelly as our first attendee. Wow, Matt, very, very honored to have you on. And so just a few announcements. We have, IMN Dana Point coming up on June 3rd and June 4th outside LA. We're going to be there, as well as an upcoming workshop on July 26th and 27th here in DC on note investing fundamentals, and you can check the event page for that information. So without further ado, we have on Fuquan Bilal. Welcome to the program, Fuquan.
Thank you, I appreciate it. I see you started off paying some bills. You must be getting some checks already from Nimi.
Yeah, yeah. So no, we got to go and like you and I have kind of talked about. You have all these services. You're doing these webinars, and they're great for me to grow. They're great for the people that are participating to grow. But at the end of the day, we're doing deals and we're making money outside this for a living. So we're kind of balancing this whole thing. And
awesome. Having fun and adding value is, something that you do all the time, and I like to do as well. So this platform is pretty good. I like, you give it the interview, but I just wanted to thank you for having me on, because I appreciate the community that you're cultivating, and the content that I see on the page is definitely a great resource. So keep doing what you're doing, man. It's great. I think, is one of the best forums that's out there from what I've seen, as far as the interaction and the knowledge that's being shared on it.
Thank you. That's much appreciated. I know. What's that?
You can send me the check later.
Oh yeah, yeah. Roger that. Or I know that you and I have talked about doing something too jointly from a training perspective. A little later on this year. So I think that's going to be pretty exciting to see what we can kind of put together between the two of us.
Absolutely. I'm actually collaborating with a few other people who's been in this space for a while, and just trying to do different things to add value to, new people getting in the space, or just mastermind with other people who's in a note business or real estate business. So looking forward to it.
Yeah, and I mean, even Dan Barnes on here with us now, and him and I have had a conversation just recently. He's looking to see how he can add value to the community, and do it as a give back, and as well as help with how note investors communicate with legal as well.
Yeah, legal is I gotta say, the attorneys are the ones who make the most money in the note business, right?
They don't see that though. They see it the other way. They get drips, right? They get drips of income. So whether you win or lose. But anyway, so let's talk here. You and I, you and I first met 6 years ago, and it was interesting because there was one point in when I first started note investing, and you had been doing it a few years, where I drove up to Jersey and we had a sit down meeting in your office, and I remember. Shortly after that, you're like, wow, I can't believe you drove up here to have a sit down meeting with me here on notes. And I was like, yeah, let's figure something out. And, I got to say now, given kind of how you've been progressing and just blowing up in every which way, I would say now if I drove up to Jersey to see you, you'd be like, heck yeah, this guy's going to drive up to Jersey to see me. Who wouldn't drive up to go see me? I'm Fuquan Bilal, right?
That's crazy. I was laughing at the marketing and promotion you did for this. I was like, wow, I feel like, that was great. You said the most respected guy in the country. I was like, wow, is this guy drinking early on Friday?
Well, Steve.
Basically, we do constantly, like I've done, share with people organically stuff I learned, the challenges that, I've been doing a business, working out assets or whatever. And just sharing that experience with people, genuinely, it goes a long way. I meet a lot of people at events, and, I'm glad to see that they progress to the next level. A lot of people left their jobs they were working and doing notes full time, started a business out of it. So I'm pretty excited about that. As our friend Shando would say, my heart is still on fire for the business. I have a passion for real estate in general. Notes is something that really helped me take my investment strategy to the next level, and understanding that whole concept, the relationships that I've built in the business with servicers, brokers, asset managers, all of the above has really helped a lot of us in the business, right? Our vendors, we help each other. They teach us the business organically, keep us in compliance with regulation. And if you meet great sellers, you have the opportunity to still run a profitable note business. So I think that where we are today is great because there's less people that wasn't doing things efficiently and in the right way or not in the business. And it's just more room for the people who really want to get in a profit from it and, help homeowners, do that. Trades are much larger. There's still a few people. Paper Stack is a good resource that's out there. Shout out to Brett. I like what those guys are doing, adding value as well, putting out inventory. People are saying, oh, I can't find inventory. That's a great place to start. There's other sources also going to events. So, pricing is up. Of course, it's a seller's market now. And these are things that I'm seeing. I'm paying more for assets than I was paying when I first got started, late 2011, early 2012. But it's still room for profit. I mean, if that was the case, people still wouldn't be looking at tapes, trying to analyze them. A lot of products on the market, especially seconds. I mean, are you seeing those 300 million UPB tapes that are coming down from seconds a few months ago?
Yeah, no, it's been a lot of activity this year on higher level pools that have been coming down. I know pricing's been really, going up with those pools too, but you have to play at that level. So let me just kind of back up here for a moment, and we'll talk about kind of where things are at now as an industry. But when most note investors start, they start with, hey, let me buy a few notes, let me see how it goes, let me kind of learn and grow, and let me see where it goes. And they don't have that kind of sense of direction. You wrote in your book, your recent book, Passion for Real Estate, you wrote, hey, you were driving around without a steering wheel, right? And that's kind of how the analogy you put. So a lot of people that come into space do it that way. But when you started, when I met you, and you were only in the game 2 years, and the business model that you had set up, you had a group of asset managers that were pounding the phones, you were buying, mid-sized deal flow and all that. I was like, wow, this guy is 10 years into it. I see a very mature business at this point. So it's very interesting to see that you came out of the gate differently. What do you attribute that to?
Well, I think with actually real property. I always joke with you, and I said notes make me soft. Sitting behind a computer. Still in sales because I love sales. I've always been in sales, but the real estate really coming from that structure, getting into notes. It was just more of an admin process and creating those relationships. And once that was done, the rest was history. I mean, you know, we've always learned you need three things to be successful in a business. That's the capital to buy notes, the source where to find them, and scalability. And scalability was the biggest challenge for me in the beginning when I was able to take down larger trades to be able to process, you know, all those assets in a time inefficient amount, to learn to sell assets to recapitalize on a percentage of the of the pool that you purchase. I mean, it was just a lot into that. So what helped us, again, was having a mentor, having people that you can really, you know, reach out to kind of give you the things that you needed to move forward, and then taking the action to do it, right? There's so much knowledge. Everybody go to these events, they take notes, and, you know, they don't really put everything that they receive from these events or from people into action. So just staying with having a discipline, I would say also, you know, helped me build a foundation to be able to get it done, you know, quicker than average.
You know what's interesting to that point is that I went to Steve Lloyd's mastermind session about a year ago, about a year. I don't know if it was last year. I think it was last year. And it was amazing. I actually cried about 3 separate times during that event. It was so emotional. But the one thing that he said that it stood out is he's like, okay, who wants $1 million real estate deal? Who wants $10 million real estate deal? Hands go up. And then he's like, well, who has the bandwidth to handle that? You know, access to capital, you know, vetting capabilities, et cetera, et cetera. And very few people out of that group, you know, had those resources in place. So it's about that scalability to what you're saying.
Yeah, absolutely. I'm so bad at Steve for that one. I didn't make the cutoff time, so I really wanted to come.
Yeah, it sold out in like a day.
I was like, wow, really? He's like, yeah, time is already built. Like, all right. So anyway, shout out to Steve Lloyd and the whole Stone Bay Foundation.
Well, he just wrote a comment. Nice sunglasses, Mr. Cool.
Exactly. My swag is at 100. This guy said I'm the most respected, you know, the best in the country. I'm like, thanks, Martin.
Well, it's funny because, you know, like all your videos you do when you're going through the real estate properties and doing the rehabbing and everything, you know, that's cool beyond belief. With the note space, it's hard to have like coolness to it because it's so admin intensive, but you've pulled it off today with the sofa and the glasses and everything else. I got to give you that.
Exactly. It's real. I mean, you know, I'm not going to be up here in this suit and tie. You know, it's Friday afternoon, talking talk, hanging out.
And we just had we talked for a few minutes. Someone watching here, you know, who's joined us for this session, you know, just got $107,000 payoff today. So they called me about an hour or so ago. So I got a hats off to you. I'm not going to throw any names out there, but you are very special. This is a definite happy Friday for you. It's not like happy Friday for, you know, someone who just works a job they don't like and then, you know, they're happy that they can go happy hour tonight. That's like good for you. You just made your year.
I have a few, well, actually, probably more than a few. Delinquent senior lien status seconds I can sell you if you just got that payoff. You're gonna need it for the write-off, you know.
There you go.
They're in foreclosure from the first. They almost there, so you know I'll give you a good price for them.
Yeah. Well, you heard it here. You know, Fuquan is going to loop it back to himself. So, as in true fashion. So tell me about what's that?
So they need that tax write-off. I'm just kidding. Go ahead.
So 2 years ago, we had Distress Mortgage Expo in Newark, and you came to speak to my protege group. And, you know, so I really appreciated that. I mean, you didn't have to do that, but you do a lot of things that are, you know, well outside, you know, working on the actual flips or working on, you know, note purchases and everything else. Why do you do all this extracurricular activity?
Well, it's real estate. I mean, you see here, I'm representing passion for real estate investment. So for me, I've been doing real estate for 20 years and I came from a sales background. I really love what I do. I'm passionate about it. I like going to look at deals, especially local to me in neighborhoods that I've been investing in for the last 20 years. I like the note business. And when you build a good team and you have the vendors and you're able to leverage that, and you're just following up with that stuff and staying on top of everything works out. So tax lien investing is something that I'm really, really, I would say, attracted to now. When I first got into the note business, notes was my new love. I still love notes, but these tax liens, especially in areas that I'm investing, is being able to give me take advantage of the market by getting a discount and still buying real estate at a discount. So for me, is being able to deploy the capital wherever it makes sense. And if you have the skill and the systems in place to do it, then all is good. When I was doing notes, if you remember, I was just focused strictly on notes, and I was saying no tenants, no toilets, no trash and terminals. At that time, I didn't understand, having hybrid flexibility or having that diversified strategy can help you and create a hedge or buffer against whatever is to come in the market. Everybody keeps saying, what's going to happen? What you think about the market? When is it going to collapse? And I'm constantly trying to do things to create a buffer against that. So whether it's investing in notes or real estate or having cash flow from rentals, I'm all for it. It is a great opportunity. If you have the skill set to do that. A lot of us go to different, I know you're doing some real estate also, and you pick up different skill sets that you can apply to your note business. So for me, it's just everyday real estate. I'm a real estate investor. Like, I'm not a note investor. I'm not a flipper or rehabber. I'm a real estate investor, all things real estate. That's how I look at it.
No,
I don't as a note investor, a property person.
No, and that's great because just when you hear that question and it's thrown out there a lot, when's the market going to tank? It's really a matter of the more you control your market, the more you control the income coming into you, the less you're concerned about what the macroeconomic state's going to be. And I think that's where, I've seen you progress, and you always seem to be evolving, where you are, further insulating yourself from any recession blows.
Yeah, I mean, you never knew where it was going to go, or how bad the values are going to dip. I always like in the now, of course, planning for the future is important. In the now is what matters. So I try to do things every day to kind of move the needle. And pretty much go from there. And I'm excited about what I do, so that makes it easier for me. So, and now I'm just having fun with it. If you see me on Instagram or whatever, that's just, I'm out working, but I'm just having fun while I'm out working.
Yeah, no, I love it. You and Shondor was on last week, and he's like, I go to the gym first thing in the morning. I know you're at the gym in the morning. And I'm over here. I wake up and I make excuses. I'm like, I got 4 kids. I'm in the struggle with the kids and all this and that. So, but I gotta rise above, my friend.
You gotta get my book, The Tire Kicker: How to Seize the Mind, the Results You Want Most. It's on Amazon, by the way. Passion for Real Estate Investment is on Amazon too, guys. I need y'all's support. Come on.
Yeah.
Well, to the bat. Matt, it's not a pamphlet this time. It's a real book.
Yeah. Shout out to Matt Kelly on that one. And we'll I'll post the link for Amazon after we wrap up here on this session here. So let me ask you, in your book, you write about a real estate event you went to where there was high level players that were buying rehab properties or buying investment properties, portfolioes in the thousands. What event was that?
That was IMN. I went to an event, and Shondor was there also. We climbed the mountain at that event. I believe it was in 2015, and I was there to host a panel. It was a real estate event, but they had a panel on notes. This was before they started doing the first note inauguration event, and now they have them all the time. This was before that one. I was actually honored to be there and host a panel. And before that, I was there for a couple of days watching these guys, these fund managers, get up and talk about the process and, the vendors they're using and the whole thing. And my goal that year was to buy 10 properties.
Mm-hmm.
One fund there was managing 10,000 single families. And I was like, everybody else had 40, 50, 100,000. I'm like, how is it possible? Like, they were publicly traded companies, and they, had a lot of capital to be able to do that. But this put the systems in place to manage that. I was really, really intrigued to find out more. So I started to associate with the vendors, start networking and doing my thing. But when I came back from that event, I just had a burst of energy, and I was like, wow, it's possible to make it happen. And I started from there. I would say last quarter, 2015, was able to where everybody was celebrating Thanksgiving and Christmas. I was out pounding the pavement, putting deals under contract, and everything else just happened from there. So I was really grateful for being at that event and making those connections at IMN.
Yeah, interesting. And I know you wrote about it in your book, and that was kind of a turning point. You've had multiple turning points, but that was a definite turning point. So let's talk about the average Joe, and most people fall into this category. So they want to start note investing, they buy a few notes. They want to start flipping, they buy a few properties, and then kind of take it from there. How do you not be that average Joe? How do you say, hey, look, I'm going to do this on a large scale. I'm going to create a fund that's going to support this, venture, and I'm going to grow this thing to 10 million or whatever the case is?
Well, I would say that that's through strategic partnerships. I mean, you're going to grow by creating strategic alliances with other people, and you guys are bringing the skill set to the table and making it happen. So if you have access, it's like people who have access to notes, and they structure the deal and putting it together, whether you're leading a trade and you're doing a joint venture note purchase with someone, or if you're doing a real estate play. Strategic partners really has helped me grow, and constantly learning from each other. It's like a man within it. So that's what I would say to someone who's new. You can't do everything by yourself. You can't be the sole practitioner. You won't get far, and you also need to have an accountability partner, I think, where you guys can take each other to the next level. So, being a part of mastermind groups as well. I'm a part of 2 mastermind groups, and that helped me a lot, not only from a business standpoint, but just from personal development. So those things I would definitely say to people who's new and getting involved and want to scale. It does take time. It's not going to happen overnight. I've been doing this for 20 years. So if you're just getting involved in 3 years, and you're trying to say, I want to do this tomorrow. Like I made a joke on a post, on one of your posts, and when people were looking for certain type of assets, and I was saying people want the creme de la creme and they want to make high returns. It just doesn't work like that in reality. It's a lot of ups and downs, and it's daily management and everything else that goes along with it. But it just takes time and it happens. So that
I'm gonna put this out there, because this was something that you said when you spoke to me and my group, and it has stuck with me. It has stuck with me in a major way. And you said when you started buying your pools of notes, you went and sold off the most favorable notes for the best pricing, and you kept all the hairy deals for yourself, and you self-trained yourself and your team to work out the hairy deals. So
yeah.
Tell me about that.
Absolutely, man. Here can tell you about that. He used to be like, "What are you doing?" I would say, if you want love, you have to give love, right? So I knew that people who got into the business, who really was risk averse, they were looking for assets where they can almost not lose their money. And at the time, they didn't want to understand the business, but they wanted to get involved like most people. They wanted to buy the safest note possible. And when people lean to that position, they're willing to pay more. And I knew that was an open space on the market, because most of the sellers were keeping all of that stuff and doing the reverse. Keeping all that stuff and selling the tail of the pool and everything else, and selling it for high prices, taking advantage of the people. So I was like, all right, let me try a different play where I can recapitalize on my spend, and people towards a bidding war or whatever, and I would get top dollar and still make a profit. It was great. And then I can take the losses from the stuff that was a little hairy against the gains on that. And it was a good learning experience, because it helped me understand the different buckets in the note business. It's not only current, senior, or speaking of seconds with high equity. It's more than that. It's learning how to get through bankruptcy stuff. It's learning how to collect on unsecured.
Mm-hmm.
It teaches you really, a lot about the space. So when you do get one of those other deals, it's pretty much a slam dunk. But everybody wants a slam dunk starting off front. So I was like, here you go.
Yeah, I mean, you and I were just talking about a loan modification before we got on. It's a note that you sold, and it was actually BK7 discharge in Minnesota and underwater. So there was no equity back in the second. And a loan modification was just received in today, with check in hand. And so, everybody wants the pretty deals, but but sometimes there's a lot that can be had from the ones that don't look pretty.
Yeah, I was actually on last night. I did a webinar last night and I talked about that. It's really based on the borrower. It just depends. Some of the investors want the property. I know a lot of guys in the space, they want stuff vacant. If it's a senior lien, they'll take it vacant. They're going to do a real estate play all day long, or they're going to, foreclose on it and then, finance it to someone who boots on the ground or whatever, and play that space, sell the financing. But being behind the door. So it's really, if it's occupied and there's some type of payment history, and you can look at the credit report and make some type of determination. You won't be 100%, but you can see probable payment, probability if they can pay, and basically if they have the ability, the willingness to pay once you go through the process. But you can't be afraid of those deals. And I mean, I wouldn't say just go out and just buy that because it's less cost. That would be very risky. But being able to buy a couple of loans to leverage that risk against, and you'll see. And some of you watching this now who worked out several notes, that sometimes the ones that you think won't work out actually will, and you'll get more from that than the one counting on that you spent a lot of money for, and it's taking longer and more legal costs and everything else, and the borrower is battling you. That's been my experience. I'm pretty sure some people who's watching this have experienced that also, or got paid for what they didn't expect it to get paid on. They're like lottery, right?
I mean, you could go through story, just as you're saying that, story after story. One that pops into my mind is one I had in Virginia. All the fair market values checked out, and the person filed bankruptcy, but the house was in such a condition that when they filed bankruptcy, they put a value in that stripped out my second, and the appraisal came in and supported that. So then I was out. I'm out the money on that, getting paid as an unsecured. So good things happen, but bad things happen to good notes, and good things happen to bad notes.
Yeah, I think that probably happens to me every week, Martin. I don't feel sorry for you.
Yeah, but I have other notes that are just paying, like paying well. So we have Brandon here. He writes, what specific productivity tools, tips, tricks, apps, and other resources would you recommend for note investors, real estate investors?
Well, there's a lot. I mean, I use AppFolio for my rental properties. I think that's a really, really good tool. That it was painful in the beginning, but I think that's a really good tool because it makes the process seamless. You can manage more notes than properties because there's a lot of moving parts with property, but having the right apps and systems in place is important. That product and some of you may use it already, it just makes it so seamless with dealing with the tenant, screening the tenant. Everything is online. If they're on Facebook, which everybody is, they can actually do everything from the app on their phone. So we've been using that, and that has helped us, be able to make things a little bit more efficient on a rental portfolio side. And as far as the note business, I mean, there's great tools out there that you can use. I liked when Alberto Artis Sanchez, he's still around. He was in the business. He had a good software that's still up and active. Note Dash.
Note Dashboard.
I see why people are going more custom though. People are doing different custom systems that have work processes in place, almost structured like a process mapping list that guides you along the way. So people are doing that custom, they're building that in all these different custom platforms that you have out there. Audio or whatever is out there. I see a lot more people doing that to kind of make it tailored to what they want. But there's plenty of systems that are out there that you can use. You can use Excel. It just depends on how many notes you're managing, right? You can have a VA create something in Excel that makes sense. It's just tracking data. Like, whatever you could create that makes it more efficient for you, that's it. When you're ready to scale to a system, if Excel is like, not working for you anymore, then you can pretty much go from there.
Yeah, absolutely. Yeah. No, that's good food for thought. I
want to add one thing for notes though.
Of course.
CoreLogic actually has been very useful to us as far as a system. They don't have it as an app yet, but doing due diligence all in one and putting everything in the dashboard, from title searches, credit reports, bankruptcy. It's easy to analyze stuff if everything is there, and then you're just verifying the data through document research or whatever. just make it more fast and efficient. Of course, you got your scrapers, values, Zillow scrapers, and all that stuff. So most of you guys are probably aware, how to do that. But for you new people, that help you analyze stuff fast. You still have to put the human touch to it, because that's what it really boils down to before you actually give your firm numbers. Some people do it manually. Some people go through the process of doing it manually. I know Matt is a big proponent of that, going through it, dotting every I, crossing every T, which is good because you'll catch things that you may not catch if you, using data to scrape and everything else. But it's a lot of good systems out there. I've seen some on your podcast also.
Yeah, I just put on there with, Ali Morstad did a, tricked out Podio. So I just put a link to that. Let me ask you, so what, tell me about the hybrid approach a little. So how does that assembled? Because I know that, that kind of, it's like all encompassing with real estate. How did you put that strategy together?
Well, actually, you're doing it now, Martin. I mean, you have real estate, you have note investing. So for me, it came about when, again, in 2015, when I started to buy more real estate, because I was always doing real estate, but just not on the level that I'm doing it now. But it was really meshing the two together, right? Looking at it from this standpoint in the beginning, speaking to accountants and saying, hey, and I'm not giving accounting advice, legal advice, and all that other good stuff. But just finding out, okay, if I have a vehicle that I'm able to purchase notes, and notes is on every income, and also I have another type of asset there where there's some depreciation from rentals and everything else, how would that mix look? Consult with accountants, finding stuff like that out, seeing what tax advantages there were in that vehicle, and then just understanding this is something I'm going to be doing, and if I can put it together in one vehicle, it will give investors pretty much, most investors, if they're investing in something, they want to know where was the asset behind it. You have mortgage notes, you have the real property if it's a first or a second, and then you have the real property in there. So I just felt that for me, creating a new fund that had the hybrid model would really be beneficial to investors, especially with the market shifting and changing. The change that I made was, almost in an up market before it kind of leveled off. So pricing for notes were getting higher, pricing it was getting higher. I saw that and was like, okay, I want to be able to invest in both in this one vehicle. So I need to start it now so I can deploy the capital wherever it's at. So that's pretty much having that hybrid flexibility, because most funds are only investing in one asset, whether it's all first or first and second. Nobody that I know, pretty sure it's out there, has that model where they have these different types of assets in there. So that's what the hybrid model is for. But pretty much people that I know are doing it. People are investing in real estate notes, doing short sales. They have some type of diversity. That's the bottom line. In their everyday real estate transaction business. They're not just in one asset class, and that's it.
Yeah, I self-manage a portfolio of residential and commercial properties in my area outside DC. But really my business model is pretty simple. I train a few people through a workshop, and if there's synergy between us, and if they have some level of capital, some level of competency, and some level of hustle, then we connect in a mentorship program that doubles as a buyer's group, whereby we're all putting in our money, putting in our sweat to go and take down larger tapes. And that's really just it at the end of the day. So it's, I only look for a few people to do this with, and it's really just to create strategic partners. That's kind of what my intention is, to use it to create strategic partners where we're aligned in terms of, integrity, capital, ability, hustle, and all that.
Yeah, I mean, that's it right there, man. That's it in a nutshell. Creating those relationships definitely help you, and you have access to more resources than what you would have on your own.
Yeah, that's what I've learned. That was kind of the mistake I made, was doing things as a lone ranger for a long time, but no more. So tell me about, let's switch gears. Social media. What are some of the do's and don't do's?
I'm still trying to figure that out. I don't have all the answers. Food for me. Actually, I was at I was at an event actually. I was at an event in PA, and I think Steve got me tickets for that event. Tony Robbins, Les Browns, Gary Vanderchuck. I think I went down there, and my first time actually seeing Gary, I was just like, wow, he was just growing up. And I wasn't on Facebook. I just got on Facebook in June of last year. It's been almost a year since I actually been on Facebook. I've been promoting my companies on social media, on Facebook and Twitter and all of that. Just putting educational stuff out. But I just wanted to create that Facebook page and be able to market my books and stuff like that. And one of my goals was, and it still is to be able to educate 1,000 people this year by what we're doing now. You know, there's going to be a couple of hundred people that's going to see this, getting something from it. So I'm going to constantly just go through the whole year, continuing to do that. And for me, it was just something fun. Actually, putting that digital footprint out there. We was talking about this before the session started. Being able to globally connect with people. I had people from other countries, hit me on my Instagram, communicating, asking me for direction, how can they get started, and me being able to add value in that way is just so much. I've been promoting my books on there. I did really good with my book sales the first 2 weeks just from social media because I've been building up that presence and awareness and bringing value and, staying constant with it. It's starting to show a little bit of reciprocity, but.
What have you done that didn't work where you're like, wow, I thought that was going to work?
I don't know. I mean, I just do what comes to heart. I just turn it on and start talking. Or if I'm going to a property, I was like, okay, I'm going to get this footage and pretty much go here and talk about what I'm doing. So I don't know. Let me see. I'm pretty sure. I can't say it was something that I posted that I regret. I don't know. I just do what comes to me is not thought like, okay, how can I structure this? Like, I barely have time. I'm not going to create a treatment for social media. It's just turn on the camera and make it happen. Before we got started, I was just on my thing, Instagram, trying to bring people to the channel. And if there's anybody that came in from Instagram, please tag inside the comments. I want to know if I was able to do that. I'm just trying different experiments with things, but I like it. It's cool. It gives me a way to share people, that people see behind the scenes a little bit what's going on, and humanizes you a little bit more. When I go out to events, people feel like they know me already, so it's good. It's doing what I set out to do to humanize myself, add value, and
So let me ask you this, because you referenced that that leadership conference. I went to the same one here in DC. I saw Gary Vee and Tony Robbins and everyone else. That was a great event. And to that point, you're always growing, and you're always looking for mentors and guidance from people that are beyond where you're at. But a lot of times those people will tell you, hey, who's in your circle of influence? They should be ahead of you. So they're pulling you towards them versus people that are kind of pulling you backwards. Do you feel at all that with social media that you're connecting with so many people, but a lot of the people may not take any action at the end of the day, so they might be, negatively pulling you back in some way?
No, not at all. I mean, there's tons of people who reach out to me in my messenger, asking for advice, complimenting things that I'm doing. I'm giving value to them. So it's not a press the flesh type of situation. It's more, a lot of times I do audios. I'm actually making the time to help people, and that's a way for me to do that. And that was the whole purpose of doing social media. So I don't feel like it's pulling me back from doing that, because I've time blocked the time that I'm on it, right? I'm not on like social media all day. I got stuff to do. So I'm an early person, as you know. Yeah. I do my thing, and if I find downtime after I finish dealing with my kids and get them home and get them situated, then I'll come on and do something else. A lot of times I'm just in the car pressing recording short videos that I can then later take and post to my story or to my page or whatever. So I do that a lot too. In the car talking, or I may come up with a concept or something that I want to talk about, and I just press play and record myself, whether I'm traveling to the airport or in the house. And that has helped me be able to, consistently put out, content and stuff as well. Sometimes I play around. I had a Mother's Day post where I had flowers and a whole bunch of promotion, just experiment.
Yeah, it's nice how you, it's the Passion for Real Estate book is a very warm read. You talk about your mom on there, and
Now, did you leave that comment on Amazon?
What's that?
Did you leave that comment on Amazon?
No, because I'm only halfway through the book, sir. And you
Okay.
have to actually finish the book before you post on Amazon. I'm not going to arbitrarily just give you 5 stars, my friend.
Yeah. I need to help a brother out. And,
great point, though.
I've read it. Guys, good or bad, I don't care. Just leave a review. Let me know if you like it, if you didn't like it. If you didn't like it, I got tough skin. It's all good.
Yeah, it's the Jersey in you, the Brick City, right? And
Shout out to Brick City.
Growing up in Westfield, New Jersey, I was told never go to Brick City.
Yeah, I mean, for me, that's one of the things I talk about in my book also, right? I talk about I grew up in candlelight dinners, and it wasn't the romantic type. I remember those things are things that makes me more passionate and motivated today to do what I want to do, because I remember that side. You know what I mean? So it's an honor again for me to be on this platform, to be able to share my knowledge and my journey with everybody. I talk about it a lot in my book. Those adversities really help put me in a place where I'm at now, and I'm forever grateful for it. You know, I talked about even something that I just mentioned at No Expo, that a lot of people didn't know, that I was shot 5 times actually when I first got involved in real estate. And
wow.
So I talk about that in the book as well. So I share a lot of my backstory. So for those of you who haven't gotten the book yet, make sure you go to Amazon and get it, check it out, leave a comment, appreciate it.
And I did a short video before, like a few hours before we're on here. And one of the things I mentioned is there's a common theme with a majority of the folks that I have on to the program here. And they are people, people like yourself. They've come in with very little in their pockets, a lot of hustle, a lot of determination, and they did whatever it took to get to a better place. And you're definitely, the epitome of what that represents. So I definitely commend you, and I think people need to hear inspirational messages like that. So let me ask you that. This is the question that's that I think needs to be asked at this point: is are too many resources a way down for one person? In other words, you come in and you have a cushy trust fund. You have a lot of money in the bank. Your parents are wealthy. Are those people tend to be too comfortable? Whereas you come in and you only have a few bucks in your pocket, and you're gonna you got to make that work. There's no option. What's your thought on that?
Well, it all comes down to the grit, right? So, if the person is natural born, they're gonna do what they have to do. They're gonna stay hungry. I mean, I think coming from an adverse situation makes you more hungry, makes you appreciate more when you get to a certain level, and you can give back. And also, that stays for the kids today, right? The next generation. I'm pretty sure our kids wasn't raised the way that we were raised, with the labor intense things that we've done, and we try to implement that as parents. And sometimes that can be a challenge as well. So I actually do that with my kids. I take them out and have them do shovel snow in the wintertime, and have them do stuff like that, just so they won't get that soft, and kind of build a sense of hunger to start earning at a young age, and kind of plant that seed early. But I've had relationships with people who are from a trust fund, and they're hungry, and they still have that hunger and that eager and determination in them. And I have friends who just live off the interest, and don't do much. I mean, that's what the predecessors really worked hard for, was to make it the next generation, for that legacy to continue. And as long as they're doing things to keep that living off that interest, they don't have to be out in the grit. But it just depends on the individual when it comes down to it. That's my opinion. If you're a go giver or a go getter, you're definitely going to be able to make something happen. But if you're not, you're going to be spinning around, wondering why me, and everything else, and blaming the world.
Yeah. No, I live every day like I'm in complete hunger mode. Like I need to bring in money. I need to eat. I feel like that sense of, and in some cases, I just, I kind of drive myself nuts with it. I just want to say, hey, I'd like to relax every now and then. We have a question. What's that?
You have to reward yourself. I mean, hunger is a lot. Hunger for knowledge, hunger, to, get the freedom that you're looking for, but you have to reward yourself. Actually, I just came from massage envy before this session. I'm not trying to brag anything, but I reward myself. I love myself. I take care of myself. And that's some of the things that I do every week. I may go to a Korean spa house for 6 hours and disconnect, rethink, re-strategize, exercise, and all that stuff is important. So you have to reward yourself. It's very important.
Yeah, I did a nice walk around a lake that we have down the street earlier today. And yesterday, my wife and I just kind of spent the day going to 3 different restaurants. So kind of restaurant hopping in Fredericksburg, where I live now. And it's very interesting because I was just thinking, I'm like, wow, most people are working now while I'm doing this. It's kind of a neat thing. We have a question from Nicholas. He says, are you investing in property and notes in the same legal entity to get to apply the tax treatment, or will that flow to you from 2 entities as well?
Yeah, so what you want to do is, first of all, I'm not an accountant, I'm not an attorney, I'm not giving legal advice. But when you speak with your accountant, the way you would structure it, some people set up a holding company, some people set up a Delaware corp with a foreign entity in a state. It just depends on what percentage of real estate you're going to buy versus what percentage of notes you're going to buy. So when you do speak to that legal professional, they can advise you which way to structure it. And what's best for you would fit your model, right?
Yeah.
I'm not going to give legal structure advice and everything else. Basically, whatever your business model is, what percentage, the setup we have is 60% of the capital we raise is invested in real estate. The other 40% is notes, and then it's a percentage of that split between second. We also do fix and flips and buy and hold. So it's depending on how you're set up, what your business model is. They will tell you to set it up this way, whether you want to have a holding company separate just for the real estate stuff, something set for notes. I've seen people do the series LLCs and everything else. So, what state you're in, a lot of that has a lot to do with it. So definitely a CPA and an attorney will be able to tell you for your business model the best way to set up to take advantage of saving those taxes.
Yeah, and set it up right in the beginning, right? Like anything else, plant the right seed.
Even when they get into notes, some people, they should set up in a company in a state like Delaware or one of the other states where you have protection, and then set up a foreign entity in the state where you're operating from. A lot of people do it different ways because there's series LLCs, trust. A lot of people do stuff from a trust, just depending on the business model, what you're trying to accomplish.
So Fred Moskowitz, our friend Fred, he writes, social media, be very mindful that anything you post note related could be found later by an opposing attorney in foreclosure.
Yeah, absolutely. That's the tough part about it is that, if you're actually working the notes and, you have your name associated with this stuff and you don't have any anonymity and protection, the way your legal structure is set up, and you can run into some troubles. But if you posting stuff that is specific to the asset you work in, if you're just speaking in general, like I saw Fred did a blog the other day. It was a good blog. He talked about 3 things, what attracts him to the note business and why he's still into it. But that was just something in general. I don't think if a foreclosure attorney found that, he would be in trouble because he's just expressing what can be done in no business and what returns you can make. So if you keep it clean like that, you should be good. It's so many things. I do webinars all the time, and I talk about partials, and I talk about collateral assignments. I talk about different workouts, and sometimes there may be borrowers listening. Never know. But it's just up to you what you want to do. If some people stay under the radar and just work their assets and pretty much go from there. I have asset managers, servicers. I'm not on the front line. So I'm not, for me, it's the attorneys that work in these assets and everything is good.
And is it still your philosophy to exit through the borrower, as the first option?
The best way. It's the most profitable way. Way. Anybody can tell me different, call me up, shoot me an email. Love to chat with you about it. because that means you did a lot of REOs. You know, speaking from a second point, you know, a lot of discounted payoffs, a lot of short sales, a lot of workouts, more than REOs. My experience.
So 40 property takebacks in 40 states doesn't sound appealing to you?
No, that's too many states to be working simultaneously at one time. Anyway, you really have to narrow it down and build good relationships with attorneys. As I was mentioning earlier, you know, attorneys make the most money in the business. You know, so you really want to create those relationships with attorneys and try to get flat rate pricing. You know, because if you get into a situation, if you're working a lot of assets simultaneously, you're going to get some legal kickback from some borrowers, and you know, then it turns into hourly. Then you know you start losing at that point. But creating those relationships with the attorney, getting flat rate pricing is really, really good. And that's one of the reasons actually I created PFREI, the podcast, that what I'm doing now as well is trying to bring these attorneys to the forefront and let them tell note investors how they can help them. I had Paul Vincent and his brother on talking about the services that they have and how they can help add value, which I thought was pretty unique in the space. So, yeah, creating those relationships with attorney would definitely help.
Yeah. Are you going to be at IMN, Dana Point?
No, I'm not going to make it to that. So I'm narrowed down to like 4 to 6 events a year. I'm attending more masterminds now, and really trying to work on self-development because your business can't grow. It's only grow to the extent that you do, right? So I have to keep going to events where I can create strategic relationships and work on self-development and really structure my business to go to the next level. So those are more of the events that I'm focused on now. I still come out to the main events. IMN, I just get the list. I mean, I'm tapped into those guys. I just log in, get the list, throw them on my email blast list. When I'm researching for notes, reach out to a couple of people. Those events maybe every other year I attend just to press the flesh. Because most of it, what I've found when you meet those guys, there's just voicemail city afterwards, and you're trying to create relationships, and it takes time, to go and cultivate a relationship, and then you have to have the capital to be able to make on those trades. $5-10 million quarterly these guys want. So it's good too. That's good to go to get the compliance and regulation information from the top down. I've always attended those events for that and learned stuff about servicing. So there's a lot of value add there for that. But I'm just tapped into the list, and when I do make it, sometimes I just go hang out at the bar and network there and find value there as well.
Yeah, absolutely.
Hit up one of the attorneys. This is what you guys can do. Give you a little trick. Hit up one of the attorneys who you're spending a lot of money with for your legal, and if you see them on that list, they get about 5 tickets. Tell them that you get one of those. Say, I need that.
Yeah. There you go. There's some value being dropped here today.
For free, so hit them up.
Yeah, or one of the speakers too.
Yeah, one of the speakers. Well,
yeah.
If they have a vending booth, they usually get like 5 tickets, and there's only like 2 attorneys, so they usually have extra tickets. Hit up Alex at Pro Title. Alex got all the tickets.
Yeah, Alex doesn't need more work in his life. So I'm going to be on a panel discussion with him. The title of the panel discussion, the topic is how to find distressed product.
Oh, wow.
Yeah.
I mean, that's great. I mean, there's a good resource also when we were talking about apps or tools or systems. They really, do a great job with providing data for due diligence. I use those guys all the time.
Mm-hmm.
All the time. They're really good. Turnaround time is good, efficient. Yeah, I'm really happy with their services.
Yeah, I think my advice on that topic is going to be to take Alex out to a steak dinner and pry him for his client list.
Yeah, it's he has a lot of good resources, but he's very ethical and he's a great guy, and we do a lot of business with him. So yeah, shout out to Pro Title. Send me the check.
There you go. Well, Bill McCafferty and a bunch of people are really digging the sofa, so I think you got to hit there.
I got it green. It's the color of money, moolah.
Yeah.
This is actually the PFREI sofa. I don't have the backdrop, but I have some podcasts going to be happening right here. This is actually a sofa in my office. just to paying some bills today. That's what I'm actually doing in the office, paying legal bills.
Yeah.
Talking about these attorneys.
I, that's why you mentioned that they, that they're the wealthiest ones out of all of the group.
I walked in the office today. She was like, "Those are the legal bills for your review." I'm like, "What? Why is the stats
Oh,
so?"
do you still like cringe when you get a letter and it's from a law firm? You're like, I know what that is.
No, it happens all the time. And if you do a lot of foreclosures, you're going to get letters from regulators. You're going to get letters from attorneys, attorney general. It's going to happen. The borrowers are going to go and try to create whatever defense they can and try to stall the process. Some of them are very crafty. You just got to hold it out. And sometimes I've released liens, to
Yeah.
walk away from a situation because the legal started getting too expensive. And you're going to have some backlash. Like if you have a portfolio of 10 to maybe 20 loans, you may not run into some stuff, but once you start managing a couple hundred loans and 1,000 loans, you're going to have legal all the time.
Well, you're going to get served too. I remember the first time I got served at my house and my wife was there and she's like, "Oh, the sheriff's here. He wants to serve you." And you're like, "What? I did not do anything I should not have done."
In the office. Yeah.
And the sheriff went to meet me where I was, and it was just a first mortgage company serving everybody.
That happened too. I actually had like 3 or 4 show up in 1 week, and my staff was looking like, "What is going on?" Like that's the process. But yeah, I mean, you do the same thing also when you foreclose. Your attorneys serve everybody in the process. If it was a third mortgage, they'll do the same thing. So it's the same process.
Yeah, I called Bill McCafferty actually that day, and I'm like, "Hey, I said, hey, this just happened. This just kind of freaked me out." And he's like, "Hey, that's part of the business. It's just part of it."
Welcome to the note business.
Yeah, exactly. There's very little excitement unless you're getting served or you're getting a payoff or a loan mod.
It's always a fun day. So I like the loan mod payments better.
Yeah.
Well, I like the not the electronic deposit email better from
FCI. Yeah.
Madison had this.
Oh, Madison. Are you fully on board with Madison?
Oh, yeah, for sure. They have this bi-weekly payment thing. That was like the deal sealer. That was really good. Give me my money right away. Sign me up.
Yeah, but I'm curious if they're credit reporting now. I know Landhome does that. That's a big service.
Yeah, I mean they report to credit. They do all of that stuff. I mean it's great. In this space, if you leverage vendors, it's good. I would say don't use one vendor. Leverage them, create those relationships. You never know how it's going to go. Both FCI Madison and Landhome, they all good. Allied is good. There's a lot of good services. No servicing company, that's servicing companies you don't even know of that's under the radar that doing a lot of good stuff. Mainly for first. It's tough really to find a good second servicer. I know of maybe 3 or 4, but I haven't really heard of more on the collection side. That's on the collection side. Anybody can service. I'm talking about collection ratio. Got it.
Well, Fuquan, we're out of time. Any final thought? I'm going to put a link on your for your book on the page here, so that way people can go out and find your latest book, Passion for Real Estate. I'm enjoying the read so far, and I'll leave 5 stars for you afterwards.
Leave how many come to heart. If you didn't like it, just say it.
No, I like it. Yeah, what was the first? Turn distressed debt into success. Well,
turn distress into success. That was really, really excited. Being in a space and notes in the beginning, learning all different types of notes, auto loans, credit card debt, and all that. I was like, I'm gonna write a book about this. People need to know more about debt investing, right? So that was the first book, and this is the book. So I appreciate you having me on, and hope everybody in the replay, leave a comment, and check me out on Instagram at Fuquan Bilal.
There you go. Take care, everyone.
All right.
Bye.